Hey, everybody. Great to have you all here virtually. Welcome to our third Life Capital conference focused on ISAs in the educational financing space. Before kicking things off, want to quickly set the stage for how the afternoon will go. In terms of format, today's video conference will consist of four 25-minute panels with a 5-minute break to stretch your legs, grab a coffee, whatever, in between the first two and the second two panels. If you have any questions, we'll be taking questions for each panel as time permits. And if you have any, please ask them in the Q&A box, not the chat function. This will just help ensure that all of the questions are seen and can be upvoted by all the guests. And then finally, I want to give just a quick thank you to Brex for helping out to put on today's event. For those of you that aren't familiar with Brex, it's a corporate credit card built for startups and closely partnered with Slow in our portfolio. They've also put together a special offer for anyone who's attended today, which we'll send your way after the event. Would love to hand off things here to Sam to give a quick intro and kick off the first panel on COVID-19 in the ISA space.
Awesome. Thanks, Adam. And thanks, Adam. I want to give a special thank you to Adam, who's done a lot of hard work organizing this year's Life Capital Conference, which is obviously quite different than we expected it to be. Just for background, for those who don't know, or kind of like, this is their first time attending an event by Slow or Life Capital, we started doing events that were kind of mini conferences on topics that were really important to us, and we really believed in, where there wasn't clearly like already a place to go if you were into them and have discussions a while ago. And they've always been really great for us. They're very light in terms of agenda. But we always kind of look to them to like bring great people together and learn and share ideas and hope that people come out of the kind of events we do with a few more thoughts or a few new relationships or things they want to follow up on in the space. Specifically with ISAs and the space involved there, it's a space that's been incredibly important to me for a very long time. I mean, the first company I ever tried to start when I was actually still in high school in 2001 was actually an early take on trying to make ISAs work. And it's been incredible to watch, recently this go from an abstract idea, I think it was trialed by Yale and a few others a long time ago, into like a beginnings of an industry with a lot of great companies and great entrepreneurs doing important work. It's a lot's changed even since a year ago. So a year ago, we did the first one of these, and it felt like an awesome moment. I mean, we got a lot of feedback, and we certainly felt like it was a great coming together of people on the policy side and entrepreneurs. People were excited, and it felt like the real start of a movement where it wasn't just one or two companies, but a whole bunch of people and regulators trying to figure out how to get us beyond traditional debt structures. In the last year, we've seen a huge amount of change as new companies have been born all over the place with different components of ISAs. The regulatory environment's changed in certain ways. And even like the places where ISAs have been applied or people are trying to apply them has dramatically expanded. So it's been a heck of a year, honestly. On the Slow front, we've made a lot of investments in the space and intend to make more. And then obviously there's like the elephant in the room, which is COVID. I don't think any of us expected to be doing a virtual Life Capital this year. I've been talking to a lot of the entrepreneurs in our ecosystem who do ISAs about the effect of COVID on their business plans, on how people are looking at ISAs, et cetera. We'll get into more of that, throughout the afternoon. But it's obviously a huge wild card. And so I'm excited to be discussing it, although I guess unfortunate that we have to discuss it. So I think, for the rest of the next afternoon and kind of these things, like hopefully you're going to hear from a lot of great panelists. I would argue we have assembled a lot of the kind of leading entrepreneurs and thinkers in the space, both in panels and in this room. Hopefully they'll come away with some new ideas, or some people you want to follow up with. We'll figure out how to do that and facilitate that. I'm bummed we can't do beers this year. But hopefully, again, people can find some meaning and value in this and kind of take something out of it in terms of a space that's clearly happening, in a very practical way. So with that and kind of some light introduction, I want to kind of start off our first panel. So if the panelists can join, we're going to do a first one on the impact of COVID-19 on the ISA space. Tess, Kate, Charlie, Jacob, if you guys don't mind patching in. Oh, hello, everyone. So fancy. So I think maybe we can start out, I think it's we kind of have to address the elephant first, given that we're remote and it's just kind of good, but kind of weird, of like how COVID is changing the space and what we weren't anticipating a year ago that we're now dealing with today. And then we'll roll back into a bunch of the traditional topics you'd expect around where ISEs wise, and lots of other questions about regulation. So yeah, can you start by everyone introducing themselves, and then we'll kind of roll from there.
Sure. I'll start. My name's Charlie Olson. I think in some ways I'm the black sheep of this panel in that my company doesn't actually work in the ISA space, something adjacent. I'm the co-founder and CEO of a company called Pando. We help people entering high volatility careers like professional athletes, entrepreneurs, people graduating business school, pool together a small portion of their future earnings into a shared group. And we've created a marketplace to help those pools kind of come together. And help people both protect their downside and invest in the peer group.
Great. I'm Tess. Nice to meet you all. I'm the founder and CEO of Stride Funding. We are a blend between a B2C and B2B2C platform for graduate students, primarily those focused in healthcare and STEM. And it's definitely been interesting seeing the market evolve and the different models that have come into play.
Jacob. Yeah, go ahead.
Yeah, Jacob from Community Investment Management. Hi, everyone. We're an institutional impact investment manager that focuses on innovation and lending and finance to reach underserved communities. And we've been looking into the ISA space for a number of years, made our first investment in Kenzie Academy with an ISA financing late last year, and really just interested and keen to make sure that ISAs are being used to align incentives between schools and delivering on really good outcomes with their students.
Got it. I think we're missing Kate.
But I'm here with Vimo Education. I've been with Vimo on and off for about 5 years, currently serving as Chief of Staff. Vimo has launched a couple of notable ISA programs, Back Boiler program at Purdue University, workforce program with San Diego Workforce Partnership, and we're super excited to be here and talk with you all today.
We got Kate's video back. Amazing. Great. So I guess just jumping right in, like I think, again, you guys all have companies that are touching the space in various specific ways. I'd be curious if to just start with honestly a lightning round, which is impact of COVID-19. If you had to get it into a sentence or two in terms of, your business specifically and what you're seeing in the space, what's like before we get into the long version, let's talk about the quick version. What are you guys seeing? Tess, you want to start?
Sure, absolutely. So from a Stride perspective, as I mentioned, we primarily focus on direct-to-student channels, and so we don't rely on the on-campus presence. So what's been really fascinating to see is, given the uncertainty in the market and many students being at home and being more cautious on how to pay for school, we've seen a huge uptick in demand. We actually looked at our numbers in February pre-COVID versus March and April during COVID, and we've had a 4x increase in applications with minimal marketing spend. And so that's been really fascinating to see that students are much more cost conscious. Also, many of our students are, again, in healthcare, so primarily nurses. So it's been also, just very impactful hearing the day-to-day stories of those who are in the field and studying to be part of the broader story around COVID-19. And so that's definitely the first impact I think we've seen, is just the influx on demand.
Okay, so demand is up for the direct student model. Kate, I'm curious, you guys obviously go more through educational institutions. What are you guys seeing?
Yeah, I think I would say that we're seeing change at a pace that you don't tend to see in higher ed ever. And schools are looking at new models for ensuring their enrollment for the fall, whether that happens online or in person, and how they'll respond to waves of COVID that might happen in the future. And I think a lot of schools are looking at everything on the table in terms of how to price online education if that needs to be addressed. And ISAs are certainly a part of that conversation in terms of helping students who may have a temporary family circumstance as a result of COVID, and creating ISA or using ISAs to address that temporary hardship and have the chance to recoup a little bit of revenue in the future.
Got it. All right. So we're seeing more, you guys are thinking, Tess is seeing more direct demand. Kate's seeing a lot of schools incentivized to move quickly on this stuff because of questions about enrollment and the affordability, right, in terms of where things are going. I mean, Charlie and Jacob, you guys are not quite as close to this stuff, but I'm curious, like on the pooling side and kind of on the impact side, what are you guys seeing?
So one of our initial kind of beachhead market was with professional baseball players, and just as a quick reaction to COVID, there's no baseball. So what was a black swan event has become an existential threat for baseball players. So we also have seen demand kind of increase. Second grouping is business school students. I think a lot of business school students previously were attracted to pooling both for community-oriented kind of alignment of interests, but also a version of upside in your peers. And I think Bill Ackman actually said it well in a podcast I was listening to recently, where he said that success is not a straight line up, and how successful you are is really a function of how you deal with failure. That kind of implies that failure is something that will happen. And I think with business school students, what I'm seeing for the first time is a realization that growth and up to the right market and individual movement is not preordained. So I think that kind of products that help alleviate some of that risk, whether it's pooling or ISAs, are in vogue.
Yeah. I mean, I'll just chime in on this quickly. And Jason, Jacob, I really want to hear from you on this too, is one thing I've been talking to a lot of entrepreneurs about is the fortunes of so many companies just flipped, right? There were all these companies in the online grocery space, tough space to be in, who a few months ago were really struggling. And you had a bunch of startups in hospitality that were doing unbelievably well. Fortunes just flipped overnight. And I think that's kind of even for engineers, right? And people in market, business school, et cetera, made them recognize the fact that into your equity, for instance, there is real value to risk pooling, right? In a way that it didn't even feel like that. The visceral reality of that, I think, has really hit people pretty hard.
Yeah, maybe say one more thing. Long-term risk has become short-term risk.
Yeah.
Right. And I think that's a big change.
Yeah. Jacob, what's your take? I mean, you kind of see a bunch of stuff across, the impact space. I'm kind of curious what you're hearing and seeing.
Yeah. So, I mean, certainly, we're at a moment where adoption is at there's just a lot of, there's this breakout moment for new digital channels. And you see that through, whether that's online education, virtual work, here we are on Zoom, or some of the other things we do around digital lending and other just digital channels. There is a certain amount of complacency preventing those from getting real deep adoption. And people, a lot of the friction that we're feeling in our lives over the last 45 days is dealing with actually getting to know those new systems and getting comfortable. And that's not, that's a one-way street. We are using these new tools, and we're not necessarily going to go back to a world of using branch banking or requiring students to always be in the classroom, et cetera. So I think there's a lot of naysayers to some of these different models, myself included, for example, that are going to be proven wrong as we see this high level of adoption increase across digital channels. Where I think that's relevant to ISAs is there's quite a bit of both need, as well as the majority of the current volume that we see in the space is not so much on 4-year colleges, it's around workforce training and potentially a lot of online workforce training. And so the demand, like Tess mentioned, demand is way up. Demand is up for those programs, for ways to find those programs. And the bad ROI on a lot of the programs is coming into being crystal clear, because now people are enrolling in those programs and they need to find ways to pay for it that hopefully can be more aligned with outcomes. I think the challenge, though, is finding investors who are interested in backing people to go into this job market, where essentially what we've done with ISAs is create a very progressive way for people who are successful to help pay for those who are less successful. And there's real, that's great that there's some impact investors out there who are piloting this model, but I do think we have to ask ourselves, how sustainable will it be to have an ISA market where employment and placement is under so much pressure? And the proof is in the pudding there as to how placement numbers come out in this very challenging job market.
Well, let me ask you another question that's kind of related to that in terms of the pressures on ISA because of this, which is, it's interesting that ISA is part of the story has to be that debt is way too expensive, right? Like for a whole bunch of reasons. In a world of like zero or negative interest rates, right? In a world where, effectively, I've asked Tess before, it's like if nursing students are obviously in huge demand, hypothetically, right? Like it should be incredibly cheap to take a debt route, right? Versus an equity route, or any sort of like hybrid ISA model for those students. Like how does like the macro picture around the cost of carrying debt, right? And also like employment guarantee and not guarantee based on like shifting needs in the economy and immediate needs in the economy going to shift the ISA narrative, if at all?
Yeah, I think that's a great point. I think it's interesting when you look at it from a graduate student perspective, because in the graduate market, federal loans like Grad Plus actually offer the same rate across all students and all programs. So whether you're doing a master's in English, which is far more risky from an outcomes perspective, versus a nursing degree, you have the same loan package. Whereas private markets are where you tend to see more differentiation, and that's actually the part of the market that's being the most challenged right now. As you think about the general interest rate environment, it's varying across the market, with federal loans obviously offering stronger protections for students, whereas private lenders are starting to differentiate based on where they get their capital from. And so whether their credit policies are becoming more tightened. And so that's where you'll start to see some differentiation, I think, between where students are able to, A, get access to capital, and B, where providers are also able to find cost-effective capital, which right now in this market is probably the supply piece is the most constrained, even though all of us have talked about demand being particularly attractive.
Yeah. Anyone else have viewpoints on kind of the macro environment's impact and, from COVID?
Maybe one other thing that I'd add is that I'm also concerned with the newfound uncertainty that needs to be priced into the ISAs, and so that might create newfound pricing pressure and drive this towards, exactly as Tess highlighted, those careers that we see to be more sure-footed, whatever the word we want to use, in terms of like having a noticeable understanding of what the band of outcomes is. And on the other hand, though, there are investors that are starved for yield right now. So if we are willing to embrace a little bit more of that uncertainty, I think a huge opportunity for the ISA community is to expand this to people who are entering some of these winner-take-all high volatility games where there is more uncertainty, but there's also huge upside. Those aren't groups of people that right now are kind of being looked at, and they should be.
Yeah, I mean, I do think, yes, interest rates have come down, but the price of capital and the yield expectations of capital has gone way up. So, I mean, look, yeah, I mean, you saw 100 to 150 basis points of baseline interest rates for government securities come down. But if you look at, I mean, there's been over 1,000 basis points of additional credit spread that was added to the market in March. And that came back in somewhat in April. But I do think that investors are not yield starved today. They were yield starved 45 days ago. But there's a lot of money sitting on the sidelines waiting to come in. But I do think that where you look at, investors starting to look at, for example, the municipal debt market to earn double-digit type returns, you're going to have a hard time competing to get their interest in a ISA pool with a lot of uncertainty on it. So there's different ways, I think, to react to that. One is to, try to change terms to extract more value out of students. Personally, I don't think that's the great way to approach it. I think a much better approach is to show that these programs actually are delivering great value for students with placement, but ultimately to realize that you're not going to see an explosion of volume come into these untested assets overnight in the current environment of uncertainty.
Yeah. Although I will ask, and I'm curious, if you guys have viewpoints on this, like one of the glass half full components here is in terms of what ISA pricing looks like and how investors look at it. Everyone has historically been saying we have to wait for a downturn to understand how to price these things and what the risk models look like. And so hopefully, I mean, my perspective at least, and I'm curious if you guys feel differently, is like there is enough volume out there that this, if we do see more, don't see a V-shaped recovery, which I'm not an optimist on, but we'll see, right? Like this will provide an opportunity for some of that learning for the market and some data for the market for the future. Do you think that's the right way to think about it, or am I missing something there?
Yeah, Sam,
Anyone?
I did learn a lot during this time, but just to kind of keep some perspective, at least from the school's point of view, is that the value of the ISAs for a lot of schools is not actually in the cash flow there. And so they are less dependent on outside capital for some of their ISA programs. And they're looking more at how does this change my institution as a whole if I start offering these assets and offering this as an option for our students. And so they're valuing their programs and what they're willing to spend of their own money to run them a little bit differently during this downturn as well.
Fair enough.
Yep.
We have a few more minutes. Is there anything you guys want to hit before I go and pull some of the questions from the Q&A?
I mean, I do want to mention that I think the ISA structure is uniquely suited for this time. I mean, the fact that you do, I mean, one of the reasons why student loans can have great resilience in a crisis. And if you look, for example, at, private Sallie Mae loans that originated right before the Great Recession, even though they had very high loss rates, over time with forbearance and being able to meet students and be patient with students, those have actually performed. And so I do think that, to your point, Sam, like this is a stress test period where we'll see the resilience of the instrument, but also how important this instrument is for students so that they have time to get their jobs, to land on their feet, to lose their jobs and then get them again. And then you're not necessarily accruing interest on your loan while it's being deferred because of that. And so yeah. I think that this is a proof point which could be very beneficial to the argument of why ISAs are good for students. It's just key to make sure that we've got people around the table who are focused on that student-centric perspective.
Yeah, I'll at least completely echo that. I mean, to me, I think Charlie, you and I talked about this, I think a few weeks ago even, was just like the most important thing to keep in mind with this is the whole point of when you're doing really well, you should pay. When you're not doing well, you shouldn't. In a world where like more people come to the realization that like, yep, there's going to be a period through no fault of my own that I have to be prepared for where like I can't earn money or like I get laid off. And it's just a reality of our modern economy where you're not working the same job your whole life. I think is a pretty fundamental component.
Yeah, I totally agree. Buys you optionality and ties incentives, links incentives in the right direction.
Yeah. So let me just go to a few of the questions. The first one, Tess, I'll just go to you. It's a question about, it says on Stride's website, the variables that are considered for an ISA percentage reflect the student's school study program when they plan to begin work. Are the variables related to the student themselves considered? And like, would Stride ever adjust percentages based on GPA, test scores, et cetera? Like, so how do you think about kind of like program versus individual?
Absolutely. Yeah. Great question. So the way we think about it at Stride is we price on a cohort basis and we underwrite on an individual basis. So just like was mentioned, on a cohort basis, we'll price based on the tier of the institution, the program, the geography, the graduation year, et cetera. Whereas on an underwriting perspective, we have certain cutoffs from a GPA perspective, a credit perspective, et cetera, that we look at to just make sure that the ISA is something that is actually going to be affordable for the student and that the student is well positioned to A, complete the program and B, be placed in a good job where they'll actually be able to achieve the outcomes that we're pricing in. So, yeah.
Thank you. Cool. I'm kind of curious with the broader panel. Have you guys seen other models? Like Kate, I mean, you guys obviously have a very different front door in a lot of ways. Like, how do you guys think about the current and the future of pricing based on individual versus like cohort effectively?
Yeah, we're relatively in the same boat as Tess, thinking about cohorts, both by school and course of study, and potentially where they are in their education journey. Since we work with a lot of four-year schools, we would potentially, think about how a student as a freshman versus a senior might be priced differently based on likelihood of completion. And I don't see us moving from that or moving towards like an individual pricing scheme.
Fair enough. Thank you. Question for Jacob. What yield spread should we monitor to get a sense of how third-party ISA finance pricing is changing?
I would look at student debt. I would ultimately look at, I mean, one, there is no one-to-one. I mean, there's a certain amount of uncertainty that it has to be priced in when you think about ISA investments. And I think, like, I would take a step back about where the funding is coming from for this, and I would put the brakes on thinking that we're going to see a flood of Wall Street money coming into this space. And this is ultimately where we need to focus on piloting, demonstrating, scaling, and getting it right, and showing its resilience, so that there is a great, like, mainstream opportunity to get to. So if you're thinking about how you're going to price this, yes, you could go out and you could look at, where, where essentially, like, some of the securitizations are trading in the market for student loans. And but I think that generally you're looking at far more at idiosyncratic risk related to the school, related to the different service providers, and making sure that ultimately you're comfortable taking on the level of uncertainty that you're taking on to see good student outcomes and placements come in over time.
Got it. So I guess, like, just a final word, because we'll keep it snappy on Zoom from you guys. Like, if you guys just think about, like, the, like, glass half full and the glass half empty, if you have, like, a tweet on, like, if we look back in 5 to 10 years and say, wow, COVID was a really rough time, but it was a great period for ISAs, going from kind of an early experiment with some great companies, people around, to, like, fully mainstream, or ISAs are dead. Right? Like, you know what I mean? Like, it turns out that this event actually is gonna really negatively impact, maybe not completely, but change the market dramatically. If you had to do your over under on the positive, the negative, I'd love to do a lightning round on that, and then we'll go to the next panel. Charlie, you want to start? Let's put you on the spot.
Yeah, sure. I think first is I think we're going to look back in 2 to 5 years and say that this was an awesome opportunity to prove the value, and we successfully proved the value proposition that an ISA helps buy an opportunity set in downside cases. And then I think the other thing that I am eager to see is whether or not we can find ways to expand access to groups that are not currently ISA-able, whether that's the four-year institutions or the or people entering higher volatility winner-take-all games.
Yeah. Who was going to ask? Kate or Tess? Sure. Either. Someone go.
Sure, I'll go, Tess. Thanks. I think on the positive, this is going to accelerate the time horizon to this alignment we've all been expecting. But on the glass half empty side of that, fast change isn't always the way we want to experience change. So many of us left for work one day with our laptops and we're told don't come back for 2 months. And now we are thrust into this work from home thing. And it's not exactly the way you would want to try it, right? You would want to get set up correctly. And as the same vein, I think we'll see people trying ISAs to navigate some of the waters coming up. And we might see some good practices and maybe some not so great practices that result from that quick change.
Great.
Yeah, great. I would add to that and say that on the positive side, I think, again, this is a great way to really see the product become more viable and valuable as we see it scale more quickly. And with that scale, hopefully seeing awareness increasing and the product itself becoming more mainstream. The risk of doing that quickly, though, is we need to, first of all, ensure we have no bad actors, especially as more players enter the market as demand increases, and also ensure that we think through how to find the right capital sources when the space is still early. This is a new asset class, and so making sure that you don't always justify that the product has to be at such a high premium given the downside protection is not a way to make this actually the most favorable product for the student, getting back to Sam, your earlier point. So I think being thoughtful and student-centric is probably the most important thing, even in this market.
Great. Jacob, take us home.
Great. You leave the most pessimistic guy for last. So, I mean, as you know, I think that I don't actually see this being a great breakout moment for ISA volume. I think, yes, you're going to see a lot of student demand, but the ability for investors to step up and fund, we've been in a market environment where a lot of investors have been interested in this, in the search for yield. the current market environment has changed that. I think that ultimately there's going to be many students who want to go to school and want to take an ISA to pay for it. But we have to be really thoughtful about making sure that the school is going to deliver on that in this very challenging employment environment, and that we have investors who really are going to be good long-term investors who believe in a student-centric model and are willing to put their money where their mouth is. And so I actually think it's going to be more funding constraints on ISAs and less demand from student or school-driven, which is where the bottlenecks have been historically.
Fair enough. And that's a realistic and a really important note to end on. So thank you all. So thank you all for joining our first panel. I think we'll all step down and do the second panel can come up on incorporating employers and the broader workforce and what's going on with that. But thank you all.
Thank you, Sam, and thank you for giving Jacob the last word to bring realism to our discussion. And I think it's really important in this world of ISAs where, I think if you look back, for those of us who have been involved in ISAs since 2015, the moment has always been now, and the moment always seems to be spreading out a year or so. And I think on one hand, I think I forget who said it, but I think in the last panel, but the most important thing is getting the right people around the table right now to try to expand this market in a constructive way. And that's really the purpose of this panel, which is incorporating employers and the broader workforce into the ISA discussion. And I think everybody knows that the panelists. I'm not going to introduce each of them, but I think the core question that Adam and Sam and the SLO team wanted to ask was, how do we start expanding ISAs in a constructive way outside of the traditional home of coding boot camps, and where? ISAs historically worked in programs with high return on investment, and very few ISAs exist outside of those limited use cases, with the exception of some of VMO's higher education ISAs. So what areas outside of coding boot camps do you think represent the most interesting expansion areas for ISAs? And I'm going to start with Michael Horn, who's probably got the most expansive view from his perch at Entangled and sort of advising a number of university presidents. If you could maybe start, Michael.
Yeah, absolutely. And thanks, Daniel, for moderating this conversation, the opportunity to participate. From my perspective, I think if you look beyond sort of the IT fields and coding bootcamp place where ISAs have gotten the deepest start, and particularly thinking about the current moment, you look to sectors where there's clear hiring right now, and so there's clear opportunity for demand and so forth. And so I think the healthcare sector, obviously trying to get the ROI equation right and the balance on the cost side with what salaries would be on the other is a question mark, but I think there's a clear ROI case to be made for ISAs to work in there. We've obviously seen the San Diego workforce partnership with ISAs, and I think we should see many more city-based or regional-based funds similar to that to create these workforce partnership opportunities with workforce boards. Seems to me to be a place where we should see some expansion of ISAs. The third one I would say is I think in this current moment right now, longer term programs at schools with the balance sheets or funds that have a longer time horizon behind them to be able to wait out the recession would make some sense. And so that's sort of an argument, I think, for where we've seen VMO with a Purdue program or something like that. But basically knowing that, yes, there's going to be a bunch of learners who go into short-term programs, they want to skill up, get back in the labor market, but the labor market's not going to come back evenly. Going into places with universities that have a strong ROI case behind them, but over a longer time horizon that can wait out the recession, seems to me a third area where you ought to see ISA vehicle take root. And then the last one I would just mention is, I think you really in a lot of sectors, public funding opportunities and philanthropic efforts to backstop learners right now ought to take an ISA instrument mentality behind what they invest, because if it's a scholarship program or just funds out the door, or even, Daniel, you've written a ton about the student loan program, you're sort of seeing a very natural downside or risk to the taxpayer or the philanthropist, where you're not going to get much money back. An ISA promises some money back, and it de-risks it for the learner. So I think it gives you some potential for recouping your costs on the side of capital, and it's a much better deal for the learner on the other side. And so I'd love to see public and philanthropic sources of capital just using this vehicle to support whatever education that they do in whatever sector, because I think it's a sounder mechanism on both of those sides. So those are sort of the four areas that I'm thinking we should see ISAs be expanding into right now.
I'd love to hear some of the lenders talk through the longer funding mechanisms and whether that can work in the private sector. But we'll get there soon enough. Emily, Tom, do you want to kind of, General Assembly's talked a lot about expanding outside of coding boot camps. You want to talk a little about where you guys are going?
Yeah, I think especially in this moment, we are very aware that the skills that we teach, UX design, data science, digital marketing, software engineering, are more likely to be resilient in a sort of a post economic downturn economy than others. But nobody can really know what the future is going to look like. And I think if you had told me where we would be in terms of jobless claims even 2 months ago, I wouldn't have believed you, right? So I think we're also sort of grappling with an external change in real time. I think for us, both with all of our work going in-house at companies with upskilling and reskilling for corporate clients, as well as sort of finding new financing options, what we were really challenging was that, we needed for people to sort of stay relevant in their careers or to prepare for their economic life, that they need to use a federally funded debt-based instrument to gain the education and training they need to, pursue a career, right? And with no real accountability mechanisms, either for the payer or for the training provider, in this case, the higher education institution, right? In terms of creating actual outcomes. And I think, ISAs and our B2B growth were both sort of outgrowths of that changing dynamic. I think what this really highlights for me is that, we need to just fundamentally rethink the way that people pay for their education and how they can sort of get the skills they need. And I absolutely echo Michael's sentiment that sort of both public, private, and philanthropic dollars have to come into play to sort of make it manageable for folks to be able to get, education and skills. And so I think we've also seen, just from a pattern recognition perspective, an increased demand for ISAs as the sort of unemployment crisis has hit, right? Students know that they, especially if they didn't like their job already, or if they just lost their job, they're going to need to get new skills to stay relevant in the post-COVID economy. And by de-risking that and sort of having it be, reducing the negative potential effects of not being able to secure employment in the short term is something that's incredibly appealing to them. And I think we're going to see that trend continue.
Emily, where's Kenzie going?
So we have been utilizing ISAs since we first opened with students back in January 2018, and have historically served and continue to serve people who primarily don't already have a post-secondary degree. I would say, both Tom and Michael have already pointed out, consumers are really interested in that downside protection that ISAs deliver. And I think, given the demographic that we're focused on serving, ISAs still make a lot of sense for us right now. And I think they make a lot of sense for other parts of the workforce development space. Echoing what Michael said, any industry that needs upskilling that's not Title IV eligible is a really good fit for an ISA, as well as the concept of, helping people bridge funding gaps. So living support dollars, places where there aren't already a natural financing tool. I think it makes a lot of sense for either institutions or capital providers who want to support a specific demographic to look at different ways to leverage these kind of alternative, flexible financing opportunities to help bridge the full financing gap for students.
Now, one of the most interesting things in workforce, and this is pre-COVID, but I think it still applies, is you see big corporates that actually have the end need, like United Airlines buying a pilot school, right? Kaiser Permanente starting a medical school. How do you think, do you think that as this bridge from education to employment kind of shrinks as you've described, what role can ISAs play a role there in what you do?
So I would say, it depends on how the employer wants to leverage them. So for example, for pulling in new potential employees where you're giving them an opportunity to get training so they can be considered for hiring, I could see ISAs ushering in a new apprenticeship-like model. So not, a DOL registered apprenticeship approach, but giving people the chance to get the skills and be considered for hiring either with that employer or with a different employer. I could also see, additional creative layers being added on, such as, meet X exemplary employee standard, and some part of this contract is forgiven if you actually end up working at United Airlines, say. I think around upskilling for existing employees, I think it's going to be a harder sell for employees who are used to having training as a benefit, to be expected to repay their income back to the employer who's already employing them. I'm not saying it can't happen. I just think it's a little harder to envision that happening out of the gate. But particularly for types of training that are not Title IV eligible. So anything kind of in that white or blue collar realm, I definitely think ISAs could start melding with the employer.
Is that HVAC, welding, those kinds of things?
Yeah, plumbing, anything where we clearly have hiring demand now and in the future. A lot of that around manufacturing and infrastructure needs. So I could certainly see that in that area.
And now, Michael, you've written extensively on guild education, which I guess comes at it sort of from both ways. How does something like education benefits that Emily described versus what kind of guild is doing versus kind of where ISAs could take us, how do you kind of square that circle?
Yeah, so I mean, I think Emily's right that benefits seen as the company giving, right, and obviously Guild is leveraging those benefits, right. In terms
you may
of
want to describe Guild slightly, because I don't mean to
totally. Yep.
Not everybody
Yeah,
might know Guild. Yeah, sorry.
Yeah, absolutely. So Guild Education basically they work with employers around education as a benefit to employees. And they bring to bear essentially a learning marketplace of different providers for different mixes of 4-year degrees, more job-focused upskilling providers and the like. And so their big clients are folks like Chipotle, Disney, Walmart, and so forth. And they work directly with those employers in providing a menu of options for the employees to upskill, and then they do a lot of investment on the return on investment from those employers to understand, in fact, is this investment in our workforce actually giving us a benefit as the employers? And they've seen a measurable return on investment, most obviously in the fact that employees are more likely to stay longer in an employer that is actually investing in them in their education, which creates a compelling argument for the education as a benefit investment beyond, frankly, just the tax break or the tax credit that employers receive from it. And so I think Emily's point is a good one, which is it's not clear that an employee who's getting this as a benefit is going to want to all of a sudden have skin in the game. Yeah, the reason I chuckled a little bit is if you look at how the healthcare marketplace, of course, has evolved, healthcare insurance, that is, over time, you obviously see employees starting to kick in some skin in the game over time as that benefit has been extended, and you start to think about different tiers, if you will. And you could imagine employers saying, there's a certain tier to which we would support directly out of the benefit because we know that we're getting a return on investment. If this is important to you beyond this, we would love you to look at an ISA mechanism or something like that to go beyond that. And frankly, you could imagine employers, I think, participating in some of that ISA mechanism if there was, if sort of it caused employees to stay longer at the company, and some of that would be forgiven. And we see on the Entangled side, we see some of our university partners that we work with starting to explore some of those conversations with employers, but more specifically, again, around the piece that Emily was saying, which is that the conversation is more if the employer will sort of backstop a class of students, and then out of that, some percentage of them would likely go to work at that company. It's a way for them to improve the recruiting opportunity, in essence, for the employer, and de-risk it somewhat in terms of the payback mechanism from the student perspective.
You know, it's interesting. Maybe as that will change as people enter, right? So when they join, they might get promised a certain amount of training only if they do an ISA, right? Now, Tom, General Assembly is actually owned by one of the largest employers in the world, Adecco, the staffing company. How does Adecco come into this, and how do you think about combining what you do with what Adecco does in terms of staffing such a large number of people? You're on mute.
Unmuted
successfully.
Thank you, Daniel. Just kind of quickly to just sort of touch to those previous 2 points that Emily and Michael were making before I go into the Adecco piece. You know, I think one thing that it's a model that we haven't been able to make work yet, but you know, right now, as of now, the employee tuition assistance hasn't been changed in decades, right? And so, right, if you just even index that to inflation, it would go from $5,250 to $11,000, right? And so you could envision a world where if an employer could leverage that benefit, you know, you could have a student come to General Assembly, take out an ISA. We could work with employers to then sort of like place them, and they could use that potentially benefit to sort of forgive the ISA obligation, right? So it's a good deal for the student because it's more de-risk for them from a financing option. And then if they do get successfully placed, then there's a meaningful opportunity for them to sort of have that forgiven by their prospective employer. So one thing that we could potentially consider, you know, as an intervention. I mean, on the Adecco side, I think, you know, one of the things that we're really grappling with as we're sort of facing this moment globally, especially since Adecco is a global company, is, you know, how do we especially work with folks from, you know, exactly the audiences that Emily was describing, you know, who have been in sort of like lower wage, lower skill jobs, and be able to sort of create the pathways both through training and placement services to get them into the types of careers that are going to be more resilient following from the economic crisis. I think, you know, one thing that we've learned about being part of a global company is, you know, in many countries, there's a lot of complexity in terms of how that actually is implemented on the ground, and varies a little bit labor market by labor market. But we're seeing some promising signs with our friends over at Modus, which is one of our sister companies that does, you know, high level IT, you know, recruitment and placement. We're also talking in a lot of the, you know, secondary markets. You know, we just launched a partnership in Louisville, Kentucky, with Microsoft to train workers who are subsidized by Humana to get new skills, and are, you know, pulling Adecco in to help with the placement piece on the back end. So I think there are also sort of interesting roles for Adecco and other staffing companies, and they've really joined up with Randstad and Manpower to say we have a responsibility in this particular moment to step up and link arm in arm to, you know, help people get back to work quickly. So, you know, very much a work in progress, but I think something where there's a lot of promise, and is I think we're grateful that we are owned by Adecco because there is that sort of natural connectivity in terms of the placement piece that we would not have had if we were, you know, still an independent company or owned by another type of business.
One follow on to Michael that I was thinking about, you know, along the lines of healthcare and skin in the game is, you know, could there be the concept of a convertible benefit where your employer pays up front, but if you leave, it converts to an ISA, say? Like, I know there's a lot of questions about investing in employees who then leave, which a lot of employers grapple with. So I don't know if it would work, but I think it could be certainly interesting to look at different ways employers finance and combat that problem of employee turnover after making high investment for relevant skills to that employer.
Emily, to that point, and sorry, Daniel, if I don't.
Go ahead. No, go Tom. Go for it.
I think, you know, Jake, our CEO, wrote a piece with Seth Harris, who's the former Deputy Secretary of Labor, really focusing on the fact that, especially in a tight labor market, given the high recruiting costs that people were paying to hire, you know, specific types of talent, especially like software engineers, data scientists, et cetera, you know, it was a relatively small pool. So everyone was fishing from the same small pond, right? By making those sort of broader investments, you can make the case that that broadens the pool, that ultimately brings down costs for all people. And you don't have this sort of like tragedy of the commons where, you know, the training is only going to folks who are expected to stay, rather than sort of expanding this sort of overall pool of skilled talent that would then bring down recruiting costs and reduce the cost of churn.
Yeah, by the way, I think that's 100%. And when we actually operate we probably train a few thousand nurses across our portfolio. We operate 3 or 4 medical schools. And I think the interesting about healthcare is the length of time that it takes to get the credentials to be useful to a human. And so I think the ISA is an interesting mechanism, but the problem is the length of time, you know, 3-4 years to get your degree program or your credential. And then once you start working, you actually tend to be underpaid in a lot of those professions. And so I think it comes to my next question, which is also one of the questions that the panelists asked and also has been asked on the question and answer side, which is, we had the funders effectively on the last panel who basically all said, you know, consumer credit markets have disappeared. I mean, I'm summarizing and I don't want to overstate it, but you know, I think we all read the newspaper. You know, the consumer credit market has disappeared. Don't go looking to Wall Street for lots of capital for all your ISAs in the next, you know, few months. So what are the new funding mechanisms? And I think we've all talked about the San Diego workforce, so we can touch on that. But like, where do you think we're going from a philanthropic perspective? How do we create the tax deductibility? How do we do what are the incentives both from a public policy perspective and from a philanthropic and government and tri-sector solution to this problem?
And I can start and then kick it over to Michael and Emily. I mean, you know, we've been working with the team at Social Finance for quite some time now on designing a program that includes an ISA, but also includes wraparound supported services, referrals to public benefits, as well as a pool of you know, cash that we can deploy, you know, for spot payments for students who are dealing with specific financial hardships in a particular moment, as well as additional case management support. And that's being funded through impact investment capital. And so, you know, I think that has a very sort of specific programmatic focus, people who wouldn't otherwise be able to access one of our financing mechanisms who are formerly incarcerated or touch the public benefit system. And so the sort of the objectives of the investors is different. It's much more around sort of like policy interventions and workforce development interventions than it is around hitting a certain IRR, right? But I think that there's going to be a greater need to.
But there's still an IRR on that capital, right?
Correct, right? But I think, you know, we started designing that in a tight labor market, right? And I think that then sort of underscores that, like, that's more important than ever, one. And two, you know, philanthropic dollars, other types of dollars, public sector dollars need to be added into the mix to make this really ensure that it's a sort of a sustainable financing mechanism, given that there's going to be reduced interest in Wall Street in this type of mechanism.
Michael, I want to give you the last word because we only got a few minutes left. So I want to turn it to Emily first, because I know you've got a lot of very diverse funding sources. And then I want Michael to bring us home.
I was just going to quickly add on to what Tom said from a philanthropic and government perspective. I mean, there's a lot that ISAs present that are similar to a social impact bond from a not just return on investment, but return to community. If we think about, you know, getting people off of government assistance programs, you know, if you really do targeted workforce intervention, there will be recouped savings on the back end. So I think there's different ways also to think about leveraging ISAs to meet, you know, specific community objectives or government objectives that could start playing a mix in how some of these different funders think about ISAs as a tool.
Michael, you get the last word, sir.
No pressure, right? So, a few thoughts. One, in terms of philanthropy, you know, I think the point is that they can both leverage their giving corpus to support ISA programs, but they can also do mission-related investments and actually use that side of their impact investments, basically not just looking for return seeking, but actually put them to work. And I think philanthropists should do a far better job and more active job of doing that. And this is a no-brainer of a space. Second, on the healthcare point that you made, Daniel, which I think is spot on, but we're actually in an interesting moment where some state licensing boards are waiving some regulations around the time-based elements just out of a need to get healthcare employees into the front lines. I would love to see some of those be made permanent and move to a competency-based stature, which then would make an ISA in the longer term actually work a little bit better if we could move to that posture. The third piece is, obviously I've been writing a lot beyond the San Diego Workforce Partnership Board, is that we ought to see renewable learning funds. And so whenever someone wants to create a scholarship, they actually ought to be modeling in it along an ISA so that it is replenishing itself and not adding risk to learners in the process. And then finally, I think the point that Tom made, which is that as you see ISA vehicles put in place, the really cool thing about them is they start to create other incentives to improve career services, to improve wraparound supports, because all of a sudden the investment capital, its incentives are to make sure that the learners get placed and everyone starts rowing in the right direction. And that suggests a lot of opportunity, I think, for not just the philanthropists backstopping these, but also social entrepreneurs getting in the space, that there's actually going to be a wind at their backs, right? So that they actually can get capital to create these entities.
Yeah, that's going to be the last word here. It's interesting. One final note. Our medical school in Puerto Rico, all of the graduates this year opted to graduate early and go straight to work in hospitals and screening and the like. So, I think to the extent that we can get philanthropic dollars to mitigate their decision tree there, I think that would be wonderful. With that, I turn it over back to Adam. I think we've got a short break, and I'll let Adam kind of drive from here.
Great. Thanks everyone. Really interesting perspective on both the program design and the financing side. Want to give everyone a quick few-minute break before we bring on Will, Austin, and Matthew for a panel on online learning and scaling.
Thanks, Adam. I'm Will Quist, one of Sam's partners at Slow Ventures. And Sam, as soon as we started working together, got me quickly addicted to this idea that it's highly irrational that there's very limited forms of financing available to humans when the capital markets have created all these other efficiencies. So I quickly dove down the rat hole with him and have had a really good time. I don't know, I think this is we only did it a year ago, but this is our third one, and it's been, I don't know, each one has deepened our learning and also broadened what we don't know. All right, so the point of this panel is a lot around scale. I think the idea is that if you're really going to make a meaningful impact, we need to figure out how you scale ISAs. There's a couple levers to this, in my opinion. I think the easiest and most obvious way to a venture capitalist sitting in Silicon Valley is the role of digital, right? The point of digital is that you can use it to create pervasive reach. But I think there's a few other topics we want to hit on downstream of that. I think, like all good panels, I'll pass the mic along quickly so everybody can give their quick background so everyone has context for their worldview, and then I'll frame it up a little tighter and we'll go from there. So Jason, you want to run with it?
Yeah, sure. Quickly, product builder by background, spent the last 3 years doing workforce education at Jobs for the Future, working across the country with key educational leaders and state leaders on labor market alignments, and left in January to build a company which is called Work It.
Great. Austin, you're next on my screen.
Yeah, I'm Austin, CEO of Lambda School. We train people to be software engineers and data scientists, and 98% of our students utilize an ISA.
Matt
Sanders, Senior Vice President of University Development at WGU. I've been here for 2.5 years, following on 2 previous rodeos, building out a dual transformation kind of an environment in which we can generate innovative new enterprises alongside core. Brought on to do that with WGU. We're actively pursuing a number of different things. Most recent enterprise we launched was WGU Academy. As we continue to unbundle WGU, alternative financial aid becomes really important.
Cool. So let's start with the obvious, which is digital is a key component to scale. So I think Austin, I threw this out to the group earlier, and Austin had a great tweet that I totally resonated with me, which is there's more to being a digitally native education organization than throwing lectures online. So I want to kick it off of what does it mean to utilize digital? How do people think about the role in digital tools, digital technologies in creating pervasive scale for education in general, but especially in an ISA setting and format? Maybe Austin, I'll kick it to you, given that that's super core to your business, and then we'll roll from there.
Sure. Yeah. So the way that I think of it is, if you think about kind of the internet in the 90s when they're saying, oh, newspapers are going online. The New York Times website looked exactly like the New York Times newspaper. And you would try to turn to like page A7 and read, the broken off piece of an article. It just made no sense. So we were kind of skeuomorphically taking what happened in a real world environment and we were putting it online without utilizing all of the incredible benefits that an online native environment gives us. So for example, we can be in a lecture of 250 students in Zoom and then break out into breakout rooms of 2 or 3 people with, instantly with the click of a button. That's something you can't do in a physical classroom. And there are a number of things that follow that. And I think what most of traditional education is going to do here in the, potentially summer or fall semester is just, hey, our school consists of lectures, so we're going to put the lectures online. And then we'll have Canvas or some LMS tying everything together. So everybody enjoy the lectures, please pay us full tuition. And I think students are going to not be particularly excited to do that. So yeah, my mental model is, what is skeuomorphic versus what is online native, and what would an online native education look like, and how would that differ?
And are there 2 or 3, I want to throw it to Matt here in a sec, but are there 2 or 3 pillars in your mind as somebody who has built your educational programming ground up digitally native?
Yeah, there are a couple really small things, which is, you can have a giant lecture of 300 people with an instructor who is paid a whole lot of money. And you can have side chats going on. So you can have conversations or people who are confused having a conversation as the lecture is happening. Like I said, you can have breakout rooms that happen immediately. And I think that's one of the big benefits. You're really easily able to bring people together and break them apart in ways that you can't do physically. So there's a whole lot of unexplored territory there as well.
Matt, how do you guys think about it?
Well, 21 years ago when WGU started, the brilliance of the governors was to focus on competency-based education, which really forced us to kind of break down the value chain of learning. And in so doing, we began to look at the opportunities to personalize education. The power of online education is you actually have data about how people behave and the activities that they pursue and what they appreciate and what motivates them onto the next thing that they ought to be doing. And so the irony of competency-based education is that, at least in our model, is it's mentored education plus a huge array of learning experiences that can be really tailored to each individual. So it's much more akin to actually a 17th and 18th century tutored education, where you have a tutor walking a prince or princess through Europe, guiding them along their learning path. But you can do that digitally at scale. We now have 120,000-ish students. I think we started 6,800 new students in April. One data point that I love is that we have a student in every county in the United States. What that represents, and the fact that we're starting each month, it represents an enormous amount of data and learning curves that are spiking every month. And then once the students come in and get into WGU, they spread out. So we don't have fixed cohorts. They tailor according to their timing. And so we learn a lot about learning patterns, and it allows us to personalize the education in a really formidable because of the scale.
Anything you thought that was like an obvious path to go down that just didn't work? Anything that kind of counterintuitively didn't work to scale, or inverting it, things that didn't feel like they would lead to scale but did?
I'm relatively new here, so I don't have all of the stories of failure, but I'm sure they're legion. We have, as any supply side organization, any organization tends to trend once they start to build and grow, they tend to become more supply side focused. And so we've had programs that we've launched because we thought they would work, that we've had to roll back and decommission because we didn't go out and follow the pattern of, okay, where does demand need to take us? What competencies are demanded by the market, and work the value chain back. So when we've lost the discipline of kind of market insight to design the programs that we know employers need, we failed probably many times. I'm sure there are plenty of other opportunities to share of failure as well.
I'm gonna kick that to Jason, given that we got to the employer, kind of the employment side, and we'll get more on that in a sec. But what have you seen kind of, I don't know, as a conduit to the real world on the shortcomings of scaling education in general, but especially on the back of software tools and a digitally native environment?
Well, one of the things you obviously want to think about a lot in the education process is the socialization process, the social capital, the mentoring, the soft skills development. You know, we're finding a lot of people in the training ecosystem that are coming out of the program with competencies that they can demonstrate, skills they've acquired, but aren't ready to work. And so there's a whole opportunity, I think, there to use technology. I think VR and AR are going to be interesting in the future to scale at bats. You know, how do you behave in a meeting? How do you show up? Those are things that employers are really lacking, even in the training programs that a lot of us are familiar with. Students are coming out not ready to work.
That goes to an interesting, I don't know, and Austin and I have had this conversation, but like, what's the role of in real life? You know what I mean? I think about everything in terms of omni-channel these days, and COVID has only sped that up. But there's the subjective and objective, and even some of the subjective stuff in learning, I think, is being built on platforms. But that edge case subjectivity that I think you're referencing, Jason, like how do you think about the role of in person for education, and maybe any thoughts you have on scaling that before I throw it to the other side?
You know, I personally haven't put a lot of thought into it, although I have seen a few models of people looking at learning gems, the idea of, you know, co-working spaces for folks who are doing remote learning so that they can get together in person, have physical spaces, social connections. So you may see something of that kind of model where folks who are training online are still choosing to be in a physical space with other learners, even if they're working in parallel on different topics. But Austin, I'd be curious what you guys have seen in terms of the demand for that type of a feeling for
yeah. And I would say demand, efficacy, and even necessity, right? If you're trying to generate replicable outcomes, and Matt, you guys probably even have. I'll kick it to the other two because I'm fascinated. I think you can get to 90% efficacy, but I'm not convinced you can get to 100% consistent efficacy without an in-person setting. So I don't know. Pass the mic to Austin, then Matt probably.
Yeah. So you know, the way we describe it internally is that kind of polish gets you a position, and then skills get you the salary. So the binary whether or not a student gets hired relies largely upon how they interact in a person-to-person environment. So we train that really heavily, and I actually personally believe that it can be trained. It's, you know, it's difficult and it's different than what you would do perhaps in-person environment in some instances. But yeah, our career coaches get really good at helping you kind of navigate that physical world in an online setting. It's probably not 100%. I don't know what level of efficacy it is. We don't have like a giant data set to, you know, say that it's N%. But, and obviously I'm incentivized to say this, but I think you can get there online. My personal inclination is usually, you know, where online has advantages and disadvantages, just lean into the advantages so heavily that the disadvantages don't matter. And I think you can do that in this instance pretty specifically.
Matt, do you have thoughts on it?
Yeah, I think it's kind of a case where what was old is new. There have been simulations being run in lots of environments. Apprenticeships were a form of simulation, but in flight schools and military, lots of different simulated environments that advanced thinking, advanced processing, build mental pathways in ways that we scarcely understand, kind of building human intelligence, but which, by the way, develops far faster than artificial intelligence, especially the reading of massive amounts of data and disparate data. So I think that there's great promise in simulations. I think there's a lot to learn from the gaming world about how how quickly people can learn to solve problems that they're not even knowing what the patterns are that they're recognizing. So I'd put our money on us discovering new ways to help people develop skill. I do think that it requires that we come up with new ways of characterizing learning. Credits, even competency units at WGU, I don't think are finite enough or discrete enough for us to get really good at measuring what people ought to be learning. We're pushing kind of a national agenda around the Open Skills Stack Alliance, where we're building new taxonomies around which we think there can be some real gravitational pull, so that people start denominating learning in similar ways, so that we can wrap innovation around it faster.
Interesting. So the next line of that, I mean, if you're going to scale the reach and impact here, you've got to reach more people and make sure you're routing them into the right places, right? If you're not reaching people, you don't have scale, and if they're not going to the right places, you're going to have shitty outcomes. So I'm curious on kind of how you guys think about doing that. Obviously, technology again plays a heavy role in, but how do you think about reach, awareness, screening? Jason, maybe start with you, and then Matt.
Yeah, it's funny. I actually would love to see, I know Austin and Matt are closer to top of the funnels, inbounds from the open market, but I have yet to see someone doing a great job of just reaching consumers and doing informed choice in different directions at scale. It's something that our team at Work is putting a lot of time into, is reaching people wherever they are and helping them through a guided process of making good choices and choosing organizations that are vetted for outcomes.
Is there enough of a data set today to do that even? You know what I mean? Are we too early in the curve of this?
We're specifically too early in the curve of what Matt's talking about, when you're starting to drill down into competencies, or even training companies, right? And in the ISA game, I think we're still really early there too. So hard to know. But I think beyond employers, how do you reach the direct consumer is a really interesting conversation as they're thinking about their career options. I haven't seen it done well yet.
I think keep going in order just to keep it. Austin, this is obviously core to your business, is how do you fill top of funnel? How do you reach the right people? Like tips, tricks on scaling, possible, impossible?
Yeah, it's funny because top of funnel has never really been our problem. Like never. I mean, last quarter we had 30,000 people apply. So for us, it's more a matter of filtering and selecting and, dare I say, underwriting than it is, reaching. And I think the cool thing about an ISA is, I think we're going to enter an environment where offering an ISA at all is relatively difficult. And schools that are charging upfront tuition or used to that business model are not going to be tacking on ISAs willy-nilly. It's going to be much more difficult to do going forward. And I actually think the narrative may shift to the notion of, ISAs don't work either for the school or for the student, which will be interesting to watch. So for us, we kind of repeat the mantra internally that the door is open, but the bar is high. And it would be really, really easy for us to select in such a way that we knew everybody was going to be hired and that would reflect in the stats. However, in doing so, you're eliminating opportunity from people who are a little bit more of a risk and who have just as much potential. So I know it's interesting that if you want to juice your stats, you can juice your stats, but then you negate the impact and you negate the scale. So it's a constant trade-off of, you want to accept everybody that you can who's going to make it. And there are people who are going to be competent software engineers that Lambda School is just not a fit for. Just the way we teach, the pace that we teach, it's just not, so I don't view it as like, are we picking students who are good enough? I view it as, are we picking students for whom the unique offering that we have is the correct set?
Do you feel like you can effectively do that screening almost algorithmically? Like, I guess back to if the point of the topic is how do we scale the availability of both the financing and the education, is what role is objective and what role is subjective? And then
I think right now it's really hard, and it's still in its infancy. So the most difficult aspect of admissions is the more data you have, the more there is efficacy, but the I mean, at a certain point, so we've been looking at models where it's just kind of a month-long trial, and we're both going to, feel it out, and we're going to get more data on you. It's really difficult to get the proper data set on how a student learns in just the admissions funnel. You can get enough that you can make kind of broad strokes, yes and no, but it's not, it's not at the level of, say, a credit score, which has your entire financial history and your underwriting against that. You're trying to like get a little sample and use that to underwrite. There's not really a good data set that you can pull to be like, how hard does this person work? How good of a communicator are they? You have to create that data, so it's more difficult.
Matt, how do you guys think about top of funnel, both absolute reach as well as screening, filtering, putting people into the right slots?
Good question. We don't have enrollment targets, never have, probably never will. What we do see is that we have a massive funnel that comes to us each month. I can tell you one of the problems we sought to solve a couple of years ago when I first got here was we were turning away 50,000 plus individuals a year for whom we didn't have enough data to predict that they would be successful at WGU, or the data that they did provide us gave us pretty strong assurance that we didn't want to take their money and see them fail yet again. And Scott Pulsifer and I both said, not good enough. So we formed WGU Academy to provide a really unique college readiness offering that is a 3-ish month path to guaranteed admission at WGU. We're working with other institutions to plug this in the front end of their organizations as well. So that's, I think we have about 4,000 students in that environment now. They earn credits for a couple of courses, plus they get a mindset curriculum and a coaching around how to learn to help them learn how to learn. And so what emerges from that is a learner who's much better prepared to actually pursue whatever pathway they choose. That's an example of us not worrying as much about the top of the funnel as what's in the funnel. What are we offering in the funnel? And it's forced us to think about unbundling the value chain much more aggressively so that we can personalize pathways and tailor them, especially for the underserved and unseen. What you'll see coming out of WGU kind of 2.0 is drafting off of our service of non-traditional learners. We're now going to get much better at serving those who nobody's been good at serving. And that requires that we become much more nimble at creating products and personalized pathways so that the learning to earning pathways can work for everybody.
Cool. Now, the final part to scaling is obviously getting people employed. And kind of the whole, this is all fun and conceptual until you put people into jobs where they've changed the outcome in their life and their earning power changes and they can service the ISA for closing the loop. Jason, talk to us about kind of the hypotheses you have on how you scale employment. The role of tech, the role of not tech. How do you take approaches to that so that the outcomes get scaled with the top of the funnel?
Yeah, so in this environment, I have no idea what the answer is.
I mean, all right, let's caveat that. You get two takes on it. You get here's how I was thinking about it 6 weeks ago.
Yeah.
Right, and here's how I'm beginning to think about it.
How I've been thinking about it in the last 6 weeks is this is a great opportunity for people to get new skills, and I have no idea what they're going to do with them. How I was thinking about it 6 weeks ago was basically, it boils down. I mean, Neetson Pellman did a lot of work at this at LinkedIn, but it boils down to social capital. It boils down to, working your own relationships and making sure that the impressions that you do have when you get them are quality, right? And so I think it's about social capital, and it's about, if you want to call them soft skills, call them soft skills, but it's about training a person and how they carry themselves. And
is that scale though? Is that scalable? I mean, thinking back to Model T, where you're replicating outcomes with kind of known distribution bell curve. I think the fundamental question is that scalable? I guess is my question, and why?
Steve Yudzinski over at JFF Labs has done some cool work with some AR and VR tech for that. But again, AR and VR tech is not ready to scale either yet, right? So I think there are opportunities, however, to do training in that way that's smart and sort of interactive. It's not as good as doing IRL for sure. We'll see. Definitely what I found across the country the last 2 years is post-secondary institutions don't do a whole lot in that category that's very useful for most of the people that are running through.
Do you think that's a function of not being incentivized to do it, or just not being a core competency, or there not being a way to do it?
I think it's a combination of culture atrophy and then the rate of change in the external world really impacted. I don't think universities were ready for the change that was going to be required, the amount of human plasticity to get into the labor market and work it. And so I think you kind of had this stagnant culture met with blunt force of fast change in how the labor market works and the type of skills I was looking for, and especially social skills, not just regular competencies.
Yeah. Matt, pass it to you, and then we'll end with Austin. We got a minute. Adam, we're going to run a little over.
Yeah, we can scale this. We've shown that we can scale lots of things, right? But it's going to take a disruptive mentality. It's not going to be pretty. It's not going to be perfect from the beginning. We, as Clay Christensen said, he should have named disruptive innovation crummy innovation, right? So you've got to start and have the courage to move up the curve. Universities aren't going to figure it out. Traditional universities aren't going to figure it out. They've got a tiny, rigid pipeline or funnel that they manage, and some of those will continue to manage theirs. Some of those institutions, as Michael Horn would say over and over again, are not going to make it. But they're not going to be the source of the innovation that solves this. We're going to have to make sure that we're courageous and disciplined to move ourselves up the learning curve to deliver on the promise of scalable, tailored learning to earning pathways over time.
Austin, you get the final piece here on this.
Yeah, the funny thing is when you ask that question, my mind goes to like, what is the structure of that team? So, we've got a couple people who run an enterprise team, and then we have what we call student sourced and kind of the career coaching team driving them through that, and then the mid-market. So for us, it's more of a process and a methodology of how you get students those touches with employers, how you make sure they're ready for those touches, than it is something more abstract. It's very brass tacks. But yeah, that was my first impression when you asked the question.
Got it. Apologies we didn't get to questions. I think we used all of our allotted time. I don't think we solved anything definitively. No. But I think that was awesome. That was a great set of answers to very esoteric questions about increasing the impact here. So thank you guys for joining. Adam, pass it back to you.
Thanks, Will. And thank you guys. Really interesting to hear about how to scale from finding the right student to actually placing them in jobs in real life. For our final panel, and a really relevant topic, want to bring up Allison, David, Kate, and Ethan to talk about policy needs in the ISA space. Thanks, guys.
Great. Thanks so much. So my name is David Su. I am Chief of Staff at Jobs for the Future. We are a nonprofit dedicated to the alignment and transformation of the education and workforce systems. And I'm really excited to be here to talk about policy. We have a great panel of folks. And so I'll start off by just letting them introduce themselves very briefly. So maybe we can go Allison, Ethan, Kate.
Great. Thanks, David, so much. Allison Griffin. I'm a Senior Vice President with Whiteboard Advisors. We're a social impact agency based in Washington, D.C. I've actually been involved with the ISA conversation since 2015, which I guess we could say is sort of the start of the modern ISA discussion.
I'm Ethan Pollack. I'm a policy director with the Aspen Institute Future of Work Initiative. So we focus on, we're about 5 years old now. We focus on the weakening social contract between employers and workers, the increased importance of access to skills and training resulting from new technologies, increased automation, and corporate governance oriented towards maximizing shareholder profit rather than serving the workers and communities. And in particular, I think we've come to the ISA space in part because we tried to create this other like weird tax policy that we found out turned out was just replicating what ISAs were already doing. And someone said, you should really check out ISAs. This is a couple of years ago. We have and found that they're very well suited for a lot of the long run structural challenges in the future of work that we find ourselves facing.
Hi, everybody. My name is Caitlin Carey. I am an education regulatory attorney. I've been in-house counsel with multiple schools, colleges, universities over the past 20 years, and I've been with Cooley now for the past 5. I'm a special counsel, and I have sort of by default become Cooley's education group's expert on ISAs. And thanks to Allison, I get invited to things like this to talk about the sort of the educational, legal and regulatory impacts on the school side and how that ties together with how the ISA market is developing.
Great. So I just wanted, before we get into the larger discussion, I just wanted to go down the line and do a quick little like Mad Lib almost. And so to ask each of the panelists to say, if you had to complete this sentence, what would your one word be? So the role of policymakers for the ISA space should be.
I'll jump in. About catalytic. I think we have do you want an explanation or just the word?
Well, let's do the 3 words and then and then I'll give you 1 more minute.
I would say forward-looking.
I would say, and this is probably a little self-serving, necessary.
So an optimistic bunch. Okay. So yeah, Allison, why don't you go ahead and explain?
Yeah, I mean, I said catalytic because I think that there have been a lot of forces at play over the last 5+ years in the private space with institutions, with funders. And I think policymakers, whether at the state or federal level, have the opportunity to create a framework to only incentivize and accentuate and maybe move forward the development of this market.
And so I said forward-looking. I think what I meant by that was that I think that there is policymakers really face a choice of balance. On the one hand, this is a point at which the market is changing quickly and rapidly maturing. And so I think it's important, this provides an opportunity to really guide the market towards really student-friendly approaches to ISAs. So I think it's important to go early, but on the other hand, I think it's important to, policymakers recognize that, regulating too hard too early can stunt a lot of the innovation. So I think forward-looking in the sense of kind of just really understanding that what they are trying to regulate will be changing pretty drastically over time, and recognize that you don't just look at the world that you're in now, but try to set policy for the world that you think will be in the future.
And I think Allison and Ethan agree completely, but I think that the third point in that triangle is that we need to have something from regulators, because obviously it's as the counsel to institutions and ISA servicers and providers trying to figure out what is the risk matrix of every single agreement that a school enters into with an ISA servicer, that the ISA servicer enters into with the student, the ability to collect. All of those things are creating a lot of uncertainty. And I think for those in the market trying to increase the penetration into the market with their ISA product, that when they're working with a school, the school is always, especially schools that are Title IV eligible and have every regulation in the world on top of them, but even just a non-Title IV eligible school has all of their state licensing requirements, and the ISA just does not fit neatly into any of those things. And so it creates a lot of regulatory risk, even setting aside the ability to eventually collect on the ISA, but just the ability to even become an approved institution if you have one. So without some additional structure around this, it's going to continue to create these uncertainties, which of course slow down, I think, some of the ability to grow the market.
Yep, no, that's great. And I think you've anticipated a little bit. My first question is really why it is important to establish that legal and regulatory framework for ISAs. And if you could maybe just talk a little bit more about that, Kate, or others, sure. and whether that should be done at the federal level or the state level. There's sort of action in both. So just thinking about where the locus of that should be.
Right, Alice and I can definitely both talk about this. I mean, if I had my wish list, I would want it to be federal, and I would want it to be preemptive so that we could just have one set of rules that would apply. Because obviously, if you have to take into account where the school is, where the student is, you know, the ability to comply with 50 different regulations and requirements becomes untenable quickly. So if there is, you know, the opportunity at some point for a federal statute that would guide this, obviously that would be ideal. And Allison can weigh in about some of the states that we've been working on. But I think the other thing to think about with that is, you know, while there is no structure, I know for me, I spend a lot of my time counseling clients on, well, this is what might happen. And this is how it's being viewed. And this is the people who support the ISA model, and these are the people who don't. And these are, you know, there's so much that could happen and could change, that just having an answer, even if it's not an answer that we love, sometimes just an answer is better than nothing. So, but obviously we have a lot to do to try to help push whatever that structure looks like eventually into a model that will be most beneficial to schools, ISAs, and students.
Absolutely, Kate. I mean, I'd agree with your assessment. I would love to see action at the federal level before we see anything emerge from the states. That's not the case as it exists right now. We've started to see states take action. There's legislation being considered in a handful of states. There's regulatory action that's taking place in a number of states right now. You know, our team is closely monitoring a lot of that activity. Ideally, we would have that framework established at the federal level. There is a bill, and David, we might get into this a little bit more through this conversation, but there is a bill in the Senate. It's actually the first bipartisan bill to come out of the Senate to create a legal framework for ISAs. We do not yet have a companion to that bill in the House. You know, I said kind of pre-COVID, every day we get closer to November is a day further we get from ISA legislation, and now I expect that is more than true. Unless we see policymakers looking at ISAs as a way to help individuals finance education and training coming out of the pandemic situation, and you know, attach it somehow to a stimulus package, I think it'll be a number of months, if not next year, before we really see movement on the federal side.
Great. So, and I know that there's, you know, if there's going to be legislation, and maybe Ethan, I can toss this one to you. There's going to be a lot of thinking that needs to happen on some of the key provisions of the bills. And one thing that people focus a lot on is student protections and what student protections need to be in place in those sorts of bills. So do you have any like key provisions that you think are important to look at, or key areas do you think that debate is really live in right now?
Yeah, definitely. So there's a couple key areas. I think one is, you know, just regulating the terms themselves to make sure that those terms are not overly disadvantageous to students. I think that this approach is very much in the spirit of things like usury laws, where we just feel like, you know, there are certain bounds, you know, outside of which we just feel like, you know, this just doesn't make sense for the student. We just know enough to know that, you know, if you have, for example, for, you know, normal loan, if you have an interest rate of, you know, 50% or something like that, then, you know, maybe we should have a usury rate a little below that. And so I think applying something like that to ISAs, obviously it wouldn't be a usury rate, but I think that there is the approach of kind of making sure that we are regulating the terms, regulating in particular the contract length, the repayment rate, the non-payment threshold. You know, those are things that I think are particularly important. I also think that state usury laws in particular can be reinterpreted for ISAs. So I think that one approach is to, on the federal level, to preempt them, or on the state level to just waive state usury laws. But I think another way is to actually look at what the state usury law is trying to do, and then potentially reinterpret it, maybe by creating some sort of range of usury rate caps that rises with income. A second approach, I think, is protections against over-leveraging. This is something that was included in the federal bill. The federal bill did not, though, include traditional loans. I think it would be difficult to do, but nonetheless, there is just a general concern about, you know, are students going to see this as not, not loans, and therefore not apply the same level of skepticism or concern about over leveraging they do when they get involved in loans, and then potentially stacking ISAs on ISAs and then on top of loans would be a concern. I think disclosure as well, both the economic outcomes, the educational outcomes of the program itself, I think needs to be disclosed better. I think that the ISA terms need to be disclosed fairly well, that allow both the students to easily compare ISAs against each other, but also then against student loans as well. On top of that, I think that, and this is one where I don't have a great answer, but I think that some of the financing arrangements between schools and nonprofit investors can give schools some bad short-term incentives. And I'm not entirely sure how to kind of address those concerns, but the basic concern would be that a school would have an incentive to cut the quality of education in order to make sure that their funders are paid. I think that relationship is something that is, I think, open for potentially being addressed by policy, but I'm not exactly sure how.
Allison, go ahead.
Yeah, I was just going to react to a couple of things and maybe give a little bit of a sort of like maybe how Washington really works, a little bit of that primer, right? I mean, I think Ethan.
Do not try.
I think Ethan laid out a couple of considerations, particularly around key parameters or guardrails for legislation. I know the bill that's in the Senate right now, associates numbers and thresholds and caps. Let me say, from my own experience, almost 20 years ago in the student loan space, Congress never picks the right number. And I mean that kindly, but at the same time, we need a starting point to have a discussion and to have a conversation with every stakeholder group around the table. And so a lot of the protections and the metrics and the provisions that are reflected in that Senate bill, I think are largely a starting place for a conversation with policymakers. And I think, Ethan, you've highlighted a couple of places or a couple of issues that aren't addressed in that federal legislation that frankly have started to be picked up in state level conversations. And so as we begin to build momentum in this community around the right policy framework for ISAs, bringing some of those conversations together is going to be so critical in establishing ultimately the framework that supports this market.
I think you both hit the nail on the head. I don't have much more to add other than I think from a state education regulatory standpoint, not necessarily from sort of a lending standpoint, which I think is where we're seeing a lot of the activity right now, but from sort of the who regulates the schools standpoint, a lot of the concern is, do students really understand what they're getting themselves into? And so how much transparency, and to Ethan's point, the sort of reinterpreting the usury laws, I think we're doing a lot of that with TILA to try to make sure that even though this is not a loan, that we're giving students the same sort of transparency and disclosure up front so they really know what they're getting themselves into. And I think the other piece of it, and I'm not sure if Ethan and Allison have heard this as much as I have on the sort of the school and state education regulatory side, which is the variability of what the student pays, and the idea that a tuition amount doesn't really mean anything. And when you're disclosing the cost of a program to a student, which is required by almost every state regulatory body, and if you're Title IV, obviously, again, how do you disclose what the cost of the program is if the student could end up paying 2.5 times that? So that's another piece that I'm not sure is easily solved, but it is consistently comes up as a question.
Great. So we've all been talking a little bit about legislation that could or should or maybe will move. And I wonder, Allison, if you have your crystal ball that you could look a little bit into and give us a little bit of a thought of what the landscape looks like, primarily probably at the federal level, but if you had state level insights, that's great too.
Sure. I mean, gosh, if I had an accurate crystal ball, I probably would have a different job. But let me say, I mean, from a based on what we've seen over the last number of months and the conversation amongst policymakers in Washington, while I said there's a bipartisan bill in the Senate, I don't know that there's necessarily full bipartisan agreement around that legal and regulatory structure for ISAs, much less whether ISAs should even be considered as a tool for people to finance education and training. So from that standpoint, I would say we have a fair amount of education and information sharing that we as a broad stakeholder community need to do. And I referenced this just a bit ago. I mean, unless there is movement to incorporate the bill that is currently in the Senate into a future economic stimulus package, my guess is that we will not see movement on ISA legislation until this next Congress post-2020 election.
Has there been talk of them doing that, of inserting it into one of the bills that's moving?
There have been talks on the periphery. I mean, that's always an option. I mean, I bring that experience from Washington to bear in this conversation. There are always member interests, and there are always issues that get, traded around at the last minute. And so of course we have our eye on that. I don't know that that's part of this broad community's advocacy agenda. But I think there's a very slim chance that could happen. I think our community is better served to put energy and enthusiasm and resource behind educating members, particularly members that you have direct relationships with, you're a constituent, your organization is located in their district. Spend some time educating and informing them. Frankly, just about what ISAs are and how they can be used and some of the very basic parameters that should be established, statutorily established. But at this point, my crystal ball tells me that we are not going to see significant movement on this issue at the federal level until next year. Just quickly at the state level, there have been activities happening, on the regulatory front. Of course, we're monitoring what's happening in California, Washington State. There's a bill in Illinois. There are two bills in Illinois, 2 bills in Pennsylvania. So there are a smattering of states that are beginning to take different actions and pay attention to ISAs in different ways. I'd say the one thing probably helpful for those listening today to consider is in large part, ISAs are being treated as or put in the same category as loans. And so as many of us know, the treatment of ISAs as a loan is not, is relatively misaligned. And so I think it's getting to policymakers to help them understand the difference is actually going to be a key strategy at the state level.
I would just add to exactly what Allison just said about the state level, and for anyone, wherever you are, to really be working within your state with your state representatives. And I mean, I can tell you I'm in San Diego. I serve on the California State Bureau for Private Post-Secondary Education Advisory Committee. I am very sort of in tune with what's going on with them, and obviously with what's happening in Sacramento. And it's California, so obviously we have a very consumer advocacy driven legislature, and we have people within our state who are very adamantly anti-ISA. And so having the ability, maybe now is a tough time to do this because your representatives are otherwise occupied, but kind of starting to think through now how you can build those relationships with your representatives, whether they're your Sacramento reps or your DC reps in your congressional districts, to start having those conversations and really helping them understand, like Allison said, because if they're only ever hearing this is a form of indentured servitude, explanation for what an ISA is, and they're not hearing about the success and how this really does benefit students, they're going to just buy into that line and they're never going to really be open to it. So use whatever benefit or, ways, means, lobbyists, whatever works for you, to really try to start building those relationships, because having the relationships established So when you have the questions and the needs, they're open to talking to you. Start early and often and start building those relationships now, because otherwise you're just going to end up with the sort of default position, especially in California, Illinois, Washington, that is not going to be helpful to students or the ISA market.
And I think just to add to that, on the state level, I think that's all the more important to be not just kind of pushing back against efforts to try to kind of make ISAs illegal, but rather to really start thinking about what is a regulatory framework that actually can protect students, what is that is also consistent with ISAs. I think in this conversation there is such an amazing kind of large overlap between, I think, what consumer protection advocates want in terms of outcomes and what the ISA market can withstand in order to be very successful. And so there's, I think, a big kind of overlap in that Venn diagram, but we need to actually have examples of that and models ready for when that comes about, to say, here's actually something that all of us can agree on and that can do everything that we want. I should just add on the federal level also, I think that Allison took maybe the more optimistic approach in highlighting the potential for federal legislation that could regulate in a positive way ISAs, but it's also the case that there is a conversation around the recent Department of Education's activities in doing experimental sites with ISAs. That itself is kind of creating a bit of a backlash. Right now, I think that's been a bit on a simmer, and something that as long as it stays on a simmer, then I think that the conversations at the federal level are still productive. But if that turns up to a boil, then that'll be a bigger challenge at the federal level, and I think push even more action down to the state level.
Excellent. Well, we are at time right now, so I just wanted to thank the panelists. I'll also just note that, I think that it's really great that we're having this conversation. JFF is trying to foster some of this dialogue as well. We've launched an initiative called Financing the Future, where we're hoping to talk about ISAs and the broader financing mechanisms that can support students in this new world. And I know, Ethan, you at Aspen are convening some folks around the policy angles as well. So would really just invite everyone who's on this call to really lean into some of those conversations. I saw that the one question in the chat of like, who could be anti-ISA? It doesn't make any sense. There are a lot of people who are on that side of the fence. And so I think bringing together the set of folks on this call who are probably more pro-ISA with some of those other folks and really engaging in some real dialogue, I think would serve all of us well. So
just want to bring Will in here to help wrap up, and I'll follow up with a few follow-up items for everyone. Thank you guys all for joining and speaking.
Yeah, not a lot to say. I think Sam and I are the holding on to the reins of this, while all the panelists who are out there in the real world pushing the agenda forward are the horses driving it. So we thank everybody for joining us. Sam had texted me that this feels like a great success. It's really fun. So hopefully we can do it together more frequently than we're able to all get together in real life. But yeah, I don't know. I always feel super lucky to get to be involved in these, because it kind of pushes my knowledge and our understanding of the space. And it's always fun to get everyone together. So hopefully there are folks who reconnected that figure out something to do together. There's folks who haven't connected before that reach out. And I always like to say, if there's Adam is the suggestion box. So if there's any suggestions on how we make this better and smoother, go ahead and let Adam know. But otherwise, thank you all very, very much. And hopefully you join us next time.